Hello, Tracy Walden here, and I wanted to address something with everybody. A lot of my agents and even some clients have asked me, they've heard the term non-QM loans. So there's this terminology out there, and lending rules change so much every year. But there is this term non-QM. So what that means is there is a qualified mortgage, and then anything that doesn't fit into that bucket would be a non-qualified mortgage. So I wanted to put a little more insight around that and explain it a little bit better. I'm going to share my screen here and explain this a little bit better. So, like I said, it's non-QM, and that's an acronym for qualified mortgage, so non-qualified mortgage. First, it would be helpful to explain what a qualified mortgage is. So what we'll do is a qualified mortgage is going to be really where they're the less risky loans. The typical loan types that everybody is aware of, conventional, FHA, VA, those are going to be the traditional qualified loans that there's this rule that the CFPB has, and it's all about the ability to repay. So all of the criteria that we look at to get you into a basic qualified mortgage is all about your ability to repay. So if you don't fit into those buckets, then you would fit into possibly a non-qualified mortgage, a non-QM loan. This is going to be where you're not meeting those typical requirements. And there's something, so when your loan is sold or is closed, a lot of times banks transfer from one to another. They might change their portfolio size and they say, oh, we want less VA loans or more 30-year conventional loans or 15-year mortgages. So typically a qualified mortgage can be able to transfer from bank to bank or servicer to servicer. In this case, the non-QM loans, they are not able to do that. So the non-qualified lender would typically keep that loan in-house. And a lot of times that gives a little more flexibility because they have their own guidelines that have to be met. So there's going to be lots of different options out there and different needs that different people will have to plug into different options. So the next thing is, so there's pros and cons to these non-QM loans. The pros are going to be there's easier underwriting, like more flexibility. So there's going to be maybe if you're a self-employed borrower or you're not reporting your income or as much income because you take a lot of losses. Just there's lots of different reasons why it might make sense, but there's more flexibility in underwriting. As I mentioned about the tax returns, or for a self-employed borrower, there's alternative income verification allowed. So maybe a bank statement showing that you have income coming in every month, even though you're not reporting that true income to the IRS. Sometimes there's certain credit requirements are relaxed. If there might be some things that show up on your credit that with these non-qualified, non-QM loans, they might be able to get past those things. Even there's going to be some more options for foreign nationals, and there's going to be fewer limits on number of finance properties. So for a qualified mortgage, you have a cap of those, and in this case, you may not have to have that. Some cons on a non-QM loan, a lot of times there are higher down payments required. So because there's still a risk factor to this, they want their collateral to be backed up with a little bit more. So we'll look at that. And then interest rates, though, and closing costs are going to generally be higher than a qualified mortgage. So higher rates, sometimes some higher fees. And not all non-QM lenders offer all of these options, or not all lenders offer non-QM loans. Non-QM loans, the next one here, are great for borrowers who, big time self-employed borrowers, as I mentioned before, investors. If you're buying a lot of investment properties, this often is going to be one of the easier routes to go. Foreign nationals, as I mentioned before, individuals with recent credit challenges. So like I said, there might be maybe a new bankruptcy or new something that falls on there. It all depends on your whole picture, but sometimes there will be some leniency for these type things if you're looking at a non-QM loan. clients with high net worth, but maybe income is not going to show, that's helpful too, and that might fit into this bucket. It doesn't always mean that everyone fits into either, if they don't fit into a qualified mortgage, that they always are going to fit into a non-QM. We just have to look at the whole scenario. So the most popular non-QM loans that we've been seeing, and like I said, this lending changes daily, but the investor loan, that's probably one of the biggest ones that we've seen. Really, it's you can do those without even being full doc. All we have to do is have credit pulled, and you do have to be employed, but we're not going to report any of your income. The income where you're using for that loan type is going to be the income that that home will produce, and the appraiser has to validate that. If you want to close in an LLC, a normal qualified mortgage, that's not allowable. You can do that if you do a non-QM loan. There are different options for I-10 or green card or foreign investors. Bank statement loans, like I mentioned, maybe we're not reporting all of this income to the IRS, but you do have income coming in regular into your bank account. We can use that as income to show you have a stable amount of income or deposits being made into your bank accounts. Recent credit histories, we already talked about that a little bit. Alternative income. So sometimes P&L, 1099 statements, a lot of that will be like self-employed, similar things, but if you have another way to report it besides just a bank account, we can use that as well. Non-warrantable condos is a big one that we've seen. There's warrantable and non-warrantable. Sometimes they can plug into Q or qualified mortgage, but oftentimes we have to go the non-QM route. Asset depletion or asset utilization, so that will be usually bank accounts or information, or if you have a lot of assets but you're not bringing in regular income monthly, there are options out there that we can use that for qualifying you. Jumbo loans, there are those are not qualified, but there are many that are going to be tradable, but then these are, or they can be transferred to other lenders. But in many cases, we have to go a different route for jumbo loans. And today, that's anything that's over the 726 loan amount. And then there's even some interest-only options. If you need to keep that monthly payment down, there are more options here available for that type of product than if you are going qualified. So I know there's a lot that we just talked about, and a lot of the specific situations that may not be, you just might not know. So feel free to reach out, and we could see if you're having problems getting qualified for a mortgage. Let's see if maybe that it would work to go a non-qualified route and see if that could make sense for you to buy a home.